Start small, regardless of how much money you have. If it's your $1,200 stimulus check, trade with $300. Keep the $900 to the side. Once you start consistently making money, throw the other $900 in there if you don't need it for other expenses. If you have $1 million, trade with 50,000 of it. Don't trade with $1 million. Learn the process. Learn how the market works and how you interact with it.
This is the How to Trade Stocks and Options podcast, brought to you by 10MinuteStockTrader.com, where we cover finance, stocks, options, entrepreneurship, education, and money. And here's your host, voted one of the top 100 people in finance, Christopher Ewell. Hey there, traders. Welcome back to today's How to Trade Stocks and Options podcast. Today, we have a special lesson for you. And this is coming straight from my brand new trading course called the AI Stock Trading System. I've literally pulled this lesson straight out of the course and I'm putting it here on the podcast because I really believe that this is going to provide you massive, massive value. And that's what I'm trying to do here. And hey, listen, if this podcast was useful to you at all, I really highly suggest that you go check out the full trading course at AIStockTradingSystem.com. That's AIStockTradingSystem.com. Hey, make sure you subscribe and hit the bell so you'll be notified every time we give you more tools, tips, and tricks to help you trade faster and trade smarter every single week. Hey there, traders. Welcome back to today's How to Trade Stocks and Options podcast. Today, I have a special guest back online, Brian Shannon from alphatrends.net. Brian, thank you so much for coming back on today. Your episode is one of my highest downloaded episodes ever. So that tells me I need to do more work with you because people want to hear from you.
Well, fantastic. Let's see if we can make it interesting again for people.
Yeah. Well, first off, let's make sure that people go to alphatrends.net and not alphatrends.com, because that is not where Brian is at.
Correct.
So Brian, my thought when I was in the shower today, this is when all my inspiration.
Shower thoughts, yeah.
Yeah. I was thinking about what am I going to talk to my guests today? My thought was, tell us some of the trades that you've learned the most from. Doesn't have to be a loser. Doesn't have to be anything where it's like, devastating or whatever, because I'm sure we've all had our own issues we've had to talk about. But what is something that you've learned the most from, and how did that translate into the lessons that you've learned that maybe you implement today?
Yeah, I will think of, perhaps one of my biggest losers was probably in 2009, 2000. I was sitting next to a guy. I was at a trading firm back then, and he would come in at, basically as soon as a half hour after the market opens each day. And then he would leave before noon every day. And he would sit down and just start buying stocks that were down the most that day. And he sat next to me. We became friends. We sat next to each other for a couple months. And, I used to think he was crazy for doing this. But here he was just buying these stocks that are down big. And every day he would leave. He'd be up like 5-10 grand every single day. He'd leave at noon. I'd be sitting there grinding it out, making half as much money, thinking, this is crazy. Why do I have all this knowledge about what stocks are supposed to do when this guy's coming in here doing this? So one day he comes in and he says, "Hey, Brian," I said to him, actually, I said, we'll call him Darren. Actually, that was his real name.
We'll call him Darren.
I said, "Hey, Darren, what are we buying today?" He's like, "What? We? Are you in with me?" I was like, "Yeah, okay." I forgot I think it might have been Axion or something like that. It was Alexion, ALXN. And it was down maybe 13, 14 points. And the strategy was buy every point down. So, or actually, it was a half a point down. So I bought 500 shares every half point down. I had about 8,500 shares. I started with 1,000. I had about 8,500 shares at the end of the day. I was down close to 20 grand. It was prop firm money. And I looked at it and so I went over to my boss and I said, "Listen, I can't hold this thing. I don't want to hold this thing. What can I'm gonna have to close this out." So I did. I ripped the Band-Aid. I sold the stock, and it was the best thing I could have done. Is that I got rid of it immediately. Who was basically my boss. I said, "Listen, I got myself upside down in this thing." He said, "Well, what are you gonna do?" I said, "Well, I'm going to sell it before the end of the day. I don't see any other option. I don't want to continue to hold this thing." He goes, good call, go ahead. So I took for what that time was a really large loss. And, the next day I came back and I just started grinding away, doing what I was doing. And, the stock continued lower. And it might have been actually the stock that put Darren out of business, because he did go out of business not too long after that. Oh. So it taught me a couple of things, Chris, which is stick to your style. Yeah. And my style is not buying weakness. I don't like to buy pullbacks. I like to buy strength after a pullback, and I don't like to buy a breakout if the breakout's extended. So, I'm looking, stick to what you know works. And if you don't know what works for you, keep your size small. I mean, I shouldn't have done it at that size. I might have said, listen, I'll do 500 shares to start, and I'll average down 100, 200 shares at a time if you're trying something new. But I was, I was looking at, I was lulled into this false certainty because I'd seen him do well with it so many times, even though it was a counter to what I knew in my mind was correct. So after that, I basically just stopped listening to everyone. And I mean that. I don't listen to anyone's opinion about any stock. It means nothing to me, because I'm just looking at the chart, and that's what matters, is the collective psychology, the opinions expressed on the chart.
Brian, that's some really deep wisdom there. I mean, you actually covered a lot. I don't even think you may have realized all the different points you touched on there. There was the averaging down, the losing your style, right? Following someone else's trades that aren't your own, right? I mean, there's so much to dissect there. Like the number one thing that I think of, and it goes back to Jack Schwager's Market Wizards, Paul Tudor Jones has the big sign over his desk that says losers average losers. Right. And I don't know why, but that's just like that thought of averaging down has never crossed my mind. I don't know. It just, to me, it's like if it's not working, I don't want to add more to it. But how did this strategy even make sense when you average down? Like that, it doesn't seem like it works at all.
Well, the thing was, and I will give him credit that he did have a pretty good knack at the time for the technology stocks that were doing it. Something that I've learned over the years is that, when you see a tech stock gap down or have problems, it'll often heal itself unless there's some kind of real problem. But biotech stocks, when they gap down, they often get left for dead, because there's usually something, some kind of phase 3 trial or whatever, and it's going to take years for them to set back up again. So, that's I guess another little tip is, if you're going to be buying stocks that are down, stay away from those biotechs, especially those little ones, because they will, go out of business before you know it. Yeah,
that makes a lot of sense. So some of the other things on there, like, losing your own style, right? So this was not the way Brian trades.
Not at all. No.
Yeah.
And so 100% opposite.
Would you ever at that point have decided to trade differently? And what I mean by that is, like, we all have our own style that we've developed, but at that point, had you set in stone, this is how Brian trades, but I'm going to try this totally exact opposite? Or were you still just kind of floating around trying different things?
No, I kind of knew where I was, but I got seduced by this strategy that I saw making all this money. Yeah. And, the best thing, actually, Chris, was the fact that it didn't work right away from the first time, because I was hugely snake bit. I knew that's not what I do. Here I am experiencing at that point was the largest loss that I had in a short period of time. And it was because I didn't do what I knew. I was seduced by a different style strategy. If I had made money that day, and let's say I had bought, the way he was buying, and I made $5,000-$10,000, and then we did it again the next day, well, I would have had this false sense of security that is that everything I knew and learned and trained to do up to that point was useless. I would be thinking, and fortunately, he's out of business. I'm still here. I'm doing my strategy, and it's not a comparison so much as, maybe it would have worked for him if he hadn't held on to that one. Regardless of what the strategy is, I'm not here to criticize it, but if risk management isn't the cornerstone to that, then you're going to be out of business. That's all there is to it.
Yeah, absolutely. So if you were to go back to that point, do you know J.C. Peretz?
course. Yeah. Yeah.
Yeah,
Good friend.
yeah. I was just talking to JC about an hour ago.
Oh, okay.
Yeah, he and I were talking, and I asked him this same question. I was like, if you could go back and tell your younger self at that time to do something differently, what do you think you would have done? And after you answer, I'll tell you what JC said.
I would tell you, just keep doing what you're doing, and that was a good loss to take. That was the correct lesson. That you're going to find that you're influenced by outside factors, other people and that. But to me, it helped me reaffirm, reestablish, and have more conviction in the fact that I need to put my blinders on and do what's right for me. So it was a great lesson. It was an expensive lesson, but the key is it was a lesson, and I learned from it, and I moved forward, and it's made me a better trader today.
That's kind of what JC said. He was like, listen, if I had gone back in time and tried to talk myself out of it, I would have said, shut up, old man, you don't know what you're talking about. Right. And I would have done it anyway.
Yeah.
But, I've had a couple of people on the show where they, I wouldn't go as far as to say they're fake guru status, but they talk about how they've never had big losses and really just never had the experience of going through that. And I'm like, if you've never had big losses, you have no idea what you're doing. Right. And I don't mean that in like I don't know where I'm going with that. But what I mean by that is like, if you haven't experienced a losses, you don't know what it's like to go through those and like the mental lessons, the Wall Street tuition that you've learned in the process. I mean, I blew up my account twice before I figured things out. And both of those times I learned a hell of a lot of lessons. And I tell you, 99.9% of my guests that I talk to all have had the same experience, right? We all have a giant lesson that we learned so much from. And to your point right there.
Chris, I think not to interrupt you, I think we discussed this actually just a little bit last time because we were talking about, I think you asked me, what do I think about Robinhood and the fact that, that Robinhood is allowing younger people to come in and make all these mistakes. And my answer then was, I believe that it's great. They can learn these lessons with small amounts of capital. They can learn these lessons with 8 shares of Apple or 12 shares of whatever they're trading. And if they can learn those lessons on such a small scale, but the money still means something to them because that's their $1,200 stimulus check or whatever it is. And the government's going to refund them to do it again. Hey, that's great. Maybe they do it a little bit different next time and they learn some lessons, and we'll see some superstar traders emerge out of this who learn lessons and can move forward and really manage money.
Yeah, that makes sense. And I Robinhood just got their $65 million fine handed to them yesterday. And I'm really grateful for Robinhood in that fact because we all benefited in the race to zero. I mean, I can tell you right now that you, me, and pretty much everybody out there is paying a hell of a lot less money in commissions than we were 5 years ago.
I've saved tens of thousands of dollars a year.
Yeah. And it really was because of, the market changed. And I'm glad to be a part of that for sure.
Definitely.
So Brian, what other trades stick out in your mind as like some of the best lessons you ever learned from?
Well, as I was first getting into full-time trading, I was setting up an account that was, it was a leveraged firm. They would, I had to put up 25 grand, and then they would give me 20-to-1 buying power. So as I was building my equity towards that $25,000, I had this one company that I believed in. It was, they had it. There was all this hype about it. Was called Chantel Pharmaceuticals. It's not even a pharmaceutical. It was a skin cream company that magically erased miracles. And they had all these people come on and talking about how great it was and the science and all that. And I remember it was about this time of year. So this was, it was right up to Christmas. And I was trading the stock really aggressively, in hopes of getting to that $25,000 so I could make the move in January. Well, I had traded it and maybe made $9,000 in this stock, and then I held it over the weekend. And Monday morning, I actually took the day off and was skiing with my dad in Vail. And I called my assistant because I was a broker at the time, a retail stockbroker, and I said, "Hey, can you give me a quote on CHTL?" And it had closed at maybe $19 per share. She goes, "Yeah, it's $12.38. I was like, wait a minute, that's got to be a mistake. I just, it gapped down 6 points. Well, Barron's did a hit piece on it that said basically this company's full of shit. There is no miraculous skin cream technology here. And so, again, that was another one. So I sold it immediately, which was the right thing, because it went down to 2, then it went down to 0, and it's nowhere to be found anymore. I find that the biggest, the losers are the losers that come at a time when it's that significant, or where I've really learned lessons, because they really sting. I tend to move from, it's not like I just move from winner to winner, but when I have winners, I just move on from that one, kind of forget about it. Yeah, it was a good trade, so what? Move on. And then when I get punched in the face, that's what I remember. You don't remember driving 10,000 miles down the highway over a 5-year period. You remember the time somebody cut you off and you had a fender bender or something bad happened. That's human nature.
Yeah, that makes a lot of sense. So what other, let me ask you this. Have you ever been in a trade where your gut feeling was like, I don't know about this, and then you turned out to be right? Can you think of anything like that?
So sometimes I will have a little bit of a piece of a stock, and I call it a just-in-case position. So I did that earlier this week with one of these little blockchain-related plays. It really, if you look at it, it's really kind of a stretch. All I know is last time that Bitcoin really went, I put this on a list because at the time it had something to do with it. So the point is I want to have just a little bit just in case it goes, even though I'm highly skeptical. Anyways, I ended up getting stopped out of it. It was a small loss. So I don't know if that answers that question.
No, I mean, we all get our losses, and at the end of the year, here's the mental shift that I had, where it's like, instead of every single trade I'm trying to win every single ticker, if that makes sense.
Yeah.
And not like all at once, but like over the year. Like, let's say I do 15 trades in Tesla. 8 of those may be losers and 7 of those may be winners, but I would hope that the winners can pay off the losers and then some. That was a mental shift that I made. And now it's like, I don't care if I have a loser. Like, I literally do not care at all. And I try and move on. But I also have to follow my plan, because if I know I've deviated from my plan, then it's more on me than on my trading system.
That works well for you, Chris. I would say for some people there might be a danger in think of it as this ticker, because if you start losing money in Tesla, then you're going to feel like, well, Tesla owes me. Yeah,
that makes sense. I get where you're coming from there. Yeah, so, I don't want to lead anybody down that path.
Yeah, it could be a dangerous mindset. But if it works for you, like people always say, well, Brian, what do you think about this strategy? I'm like, that's not my type of style. But if you're making money with it, why ask me? Why tinker with it? It's working well. We've all got to do what works for us and make the process our own, and not get distracted by Darren sitting next to you making all this money. You have to have your blinders on. You can be aware of what other people are doing. But for me, at my stage, I know what works for me. And I know if it doesn't work, it's something that I did wrong. I'm not going to blame the market. I'm not going to blame the Fed or the market makers or whatever the excuse of the day is. It's not their fault. It's my fault. I didn't get out quickly enough. I didn't read it properly. Maybe there's something I can learn from that. But I've developed a skill set over 3.5 decades that I now have the confidence that I can say, this is me versus the market. It's not me and all these people on Twitter who are being louder than me or whatever the point is. And if they're making more money, good for them. Great. Congratulations.
Well, maybe they're making more money than you will see, because a lot of those people, they make their money, right? And, they go into the fake guru status, which, it's really sad these days that you go onto social media and there are so many posturing people, right? Whereas the way that I come from is like, I really want to teach and I really want to serve. And I love talking with people like this. But if you go back to all my episodes, there is never, not a single episode where I sit on a platform and I'm like, hey, guess how much money I made on this? Or, I made X thousands of dollars today. Because that's not who I am. I don't think anybody derives any pleasure from hearing about me grandstanding, right? I listened to a podcast where this guy was talking about how whenever he sees a post from mostly young men standing in front of McLarens or Lamborghinis or whatever, talking about all the money they're making. He said, "You don't look good. Number one, you look like an ass because you're trying to show off. And number two, you made me feel bad about myself and my position in life. So whatever you were trying to do doesn't work for me." And I get that. I mean, that's exactly how I view it. Like, nobody cares about my winners. What can I teach you?
Why would they? It's your money. It's your business, you know, and that's where I have that old school mentality. People will say, "Well, Brian, how much money did you make? How many shares of that?" That's my business, number one. And how would that affect what you're doing? Whether I made money, lost money, made a whole bunch, lost a whole bunch. Why would it ever matter to you? Did you make the trade your own? Did you take that tweet and say, "Hey, I like this, and that stock makes sense to me. I'm going to buy some"? And if you made money, great. I'm not here ever. I'm not a licensed broker or advisor. I'm not here to tell anyone what to do. I'm not here to make anyone feel badly about themselves. I've got a lot of experience. I share some of that on Twitter, and you know, if it works for you, great. If you don't think so, then it doesn't bother me one bit.
Right. I had heard somebody say one time that one man's floor is another man's ceiling. So anytime I talk about stuff, I always talk in one lots, like one share, one contract, one spread, because then we're just boiling it down to its lowest common denominator.
A unit, whatever it is.
A unit, precisely. Yeah. And to me that like, I mean, you could have 3 million or you could have 3,000, but if you made a good trade and your balance increased by the exact same percentage, then that's really what matters.
Right. Yep.
So Brian, you know, you wrote this incredible book and you sent it to me, and I'm so grateful to you for that. What's some of the things that you've learned over the year that like were kind of counterintuitive to what you would think? Like, I'll give you an example.
Yeah, sure.
The concept of buy low, sell high is taught to every person who ever aspires to be in finance, right? Mm-hmm. But then when you get into the real world and you see that buy low, like you were talking about earlier, means it can go a lot lower.
Right.
And then really, like, my take on it is it's Nicholas Starvish's book, How to Make $2 Million in the Stock Market. He says, you know, you buy. Sorry, go ahead.
I made whatever. I get.
Right. It's buy high, sell higher, or I think he called it like buy high and sell dear or something like that. Right. But I mean, really, if you're trend following, that's what you're doing. I mean, you're buying high and selling higher. That was my biggest like light bulb takeaway moment of, oh, that's how it's done. Like counterintuitive to what you would ever think.
Yep. Well, I think that, you know, the premise of buy low and sell high, you know, that when did they come up with that? You know, long time ago when people were investing, when they were buy and hold. But somehow people extrapolated that to trading as well. And that's not how you do it in trading. You want some momentum. You don't want to sit there and let the stock languish and be mentally tied up in a stock that's not, you know, winning, and meanwhile watching other stocks that are doing well. You want to go where your money is best served now, and where it can continue to be. You know, this idea of buying a value stock, to me, is just another name for a loser. You know, what is a value stock? They're trying to buy something that eventually becomes a growth stock. Why not just cut out the whole value part and stick with growth stocks and don't go through all that pain. Let others do the dirty work of creating a long-term base. And then when it breaks out, get on board. You don't have to spend all your time waiting for this institution to buy it from that institution and create a solid base of support. So it always comes down to time frame too, Chris. I mean, if you're, if you have a full-time job and all you can do is, you know, a little bit of research on the weekends maybe, and you buy what you think is a good company, and you know, you're going to hold and your position size properly and diversified, then a lot of times it still can work. But that's not the world of trading. And we're talking, you know, and I'm a trader, so that's a completely, you know, different world for me.
Yeah, without a doubt. Like, I see your point there as far as the investor attitude versus the trader attitude, and then it's the uninitiated that come in and try and make that work. And, you've got these the YouTube ads. You've probably seen them, where it's like, I know exactly every day where the top is going to be in the bottom, and so my system picks all the tops and picks all the bottoms. It's like, no.
I've never watched one of those videos. I've seen ads for them, but I never click.
No. I mean, that's yeah. Anyway,
it's a shame that stuff, draws attention and people do click on it. That but they're appealing to human nature. People want what's easy. They don't want to do the work. I mean, I do a lot of work each day. I spend a lot of hours, going through a bunch of stocks and a lot of, different time frame charts, and it's work I enjoy, but it's still work.
Mm-hmm. So how do you narrow down your list of stocks like you were talking about there? Do you actually start with like maybe a list of 100 and start whittling it down from there, or how do you get to your points?
I have what I call my master list, and that probably has about 900 stocks on it.
Wow.
So once a week I go through that list, and I have it on. So I have four screens here in front of me. What I'll do is I'll have a daily chart, a 30-minute time frame, a 10-minute time frame. Up here I've got a weekly, and then over there I've got a 2-minute chart. So each one of those tickers I scroll through, and I put down what I think are the best candidates. I'll just, I'll go through those 900, and I'll try to anticipate what it might look like for the week ahead. So if I see a stock in an uptrend that's just starting to pull back, I think, well, maybe it could pull back another day or two, flatten out on Wednesday of next week, and then Thursday, Friday, maybe it gets going. So it's not set up yet, but I want to think 5 days in advance. So I put those stocks on my weekly list. Mm-hmm. So my weekly list might then get culled down to about 150 stocks. So at the end of each and every day, I go through those 150 stocks, same process, and I put little notes next to it. And then, I'll put little check marks and scribble symbols down that look like this. And then I go through that. So I'll get that, 120 down to maybe 30 or 40. Then I'll go through those once again, start putting volume weighted average price levels in there, maybe throw some Fibonacci's on there, try to really dig down into what's going on with these stocks and come up with probably a handful of 4 or 5 good candidates for the next day. Mm-hmm. But of the other 30, I might set an alert on each of those 30. So if I think a stock is maybe a day or two early, I want to set an alert on it just in case it starts to move. Or maybe I'll even set a volume alert that says, hey, it typically trades 1 million shares. If it gets there by noon, I want to know maybe something's going on. So then throughout the day, I just continue to circulate through that list of 40, and I'll just scroll down, once an hour, and look to see, are they still setting up? And I've got my little notes to say, here's the ones that are, the key ones I want to look at, and just continually updating those alerts. So, first thing in the morning, I'll get a bunch of alerts that rip, and I kind of ignore them because I don't really want to get involved in a bunch of stocks near the open. I've got my, 2 or 3 that I'm concentrating on. So I'll ignore those alerts, and then after the market settles down 20 minutes later, I'll go through and reset the alerts because a lot of times they've just ran through the alert, then they fail. So an alert is just that. It's an alert. Take a look at it. It's not an action point.
Right.
Some people, I do these videos and they'll see an alert pops up. They're like, what was that? It's just a reminder from me. Don't worry about it. I'll let you know if I'm going to, get involved in it.
Yeah, that makes sense. I mean, I actually am the same way. I don't start trading until an hour after the market opens because I want to make sure everything's flushed out before I start dipping my toe into the water, I guess you could say.
Right.
So Brian, is there anything else that, like, let's say somebody who's just off the street or maybe just out of college or maybe even they just got their stimulus money. Maybe we'll get a second stimulus check. Where do you think they should start?
You start by doing and doing very small. Trade one share at a time. You're allowed to, so do it. Take advantage of that. Don't put it all into one and think that you've got the idea because you heard some clown being really loud on social media. Start small, regardless of how much money you have. If it's your $1,200 stimulus check, trade with $300, keep the 900 to the side. Once you start consistently making money, throw the other 900 in there if you don't need it for other expenses. If you have $1 million, trade with 50,000 of it. Don't trade with $1 million. Learn the process. Learn how the market works and how you interact with it. And it's not, paper trading's okay to a point. But I love the phrase, when you commit your emotions to the when you commit your money to the market, you also commit your emotions, like it or not. And these people who are going in, getting involved with options and futures and leveraging that, well, guess what? You leverage your emotions there as well. And you're just going to do stupid things. You're not going to think clearly because everything gets magnified, not just your buying power.
Yeah. I teach people to trade with options, and that's kind of my thing. But I also tell them, it's like, I'm handing you a grenade. It can either go really right for you or it can go really wrong for you. But you need to understand how this is used before you start just like jumping in off the deep end. And that's the responsible way to do it. I don't talk about options because I don't want to handhold and tell them, because I know the mistakes they can make. And it's great that there's educators out there like you who are taking the time and saying, here's the proper way to do this. Don't just open your account, put everything into Tesla calls because you heard that's hot and, your buddies have done it a couple times. This is what happened to me. When I first started, within 60 days, I blew up my account because I bought all of my account's worth of out-of-the-money SPY calls. Because the market always goes up, Brian. Duh. Like, this is the most genius trade ever. So, yeah, I mean, I've been there. That was the first 60 days I blew up my account.
It's a lesson you won't forget.
That's for damn sure. So, hey, Brian, I really appreciate your time today. We covered a lot. I love chatting with traders like you and JC and others, because it's like, I mean, we could go all day, right? It would be like if we all got around a round table, we could literally talk all day and all night about our war stories and our passion at the same time. And I feel really fortunate for that. So Brian, I want to tell everybody, head on over to alphatrends.net, not alphatrends.com. That way we can find you there and not some crazy witch lady or whatever she's doing. But yeah, alphatrends.net is where you're going to find Brian. And Brian, I really, really do appreciate you taking the time out of your day to come on the show and chat with me again. I appreciate that so much.
Thanks for having me on again, Chris.
Okay, so what'd you think? That was pretty incredible, right? Now, if you like that, that's only a taste, only a sample of what you're going to find in the full AI stock trading system. And I really highly encourage you to go and check this out. Obviously, you are interested in learning on how to trade, and that's why you're listening to this podcast. Now, I'm going to take and download my entire trading system that I use day in and day out onto you. And the only way I'm going to be able to do that is over at the AIStockTradingSystem.com. You're going to get phase 1, 2, and 3, several bonuses, and on top of that, I'm going to walk you through over a dozen trades that I put on inside of my account, holding your hand and showing you exactly how I got in, how I got out, how I use the artificial intelligence data, and how this could work inside of your own trading portfolio on a daily basis. So make sure you head on over to AIStockTradingSystem.com. That's AIStockTradingSystem.com to learn more and to get started and to download my decade plus worth of trading experience into your hands so you can start using the AI stock trading system today, the 5-step system to take the guesswork out of trading. Hey, if you like this video, let me know by leaving me a like below, and then subscribe and share it with somebody you think could use it as well. Be sure to comment below with your biggest takeaway from this episode and any suggestions you have for future episodes. And finally, make sure you watch these other videos to help you trade faster and trade smarter, and I'll see you on the next episode.